to have a community that's really going to help the people in the community, it has to be a community that makes money for the people running it, because we're spending our time, effort, and resources to do that. And so 2022, that's part of what we need to do. Again, we're not in this to make money. We've been doing this for 2 years and haven't really monetized it at all. But in order to keep it going, we're going to have to. So we're going to make a few little changes, but it's important to us to maintain, our sense of community, the education, and helping people learn how to invest better together or on their own.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jim Pfeifer is one of the founders of Left Field Investors, a group dedicated to educating and assisting like-minded investors negotiate the nuances of passive investing and syndications. Jim, welcome to the show.
Thanks for having me. I appreciate it.
Hey, the pleasure is all mine. Same 3 questions I ask every guest who comes on the show. Can you quickly tell me, where did you start? Where are you now? And how did you get there?
Where did I start? I started as an accidental landlord in real estate, and I fell in love with it, active investing. So I did a bunch of active stuff until I discovered passive, and now I'm full-time passive. The journey in between, that's kind of a longer story, but like I said, I started as a accidental landlord, and then I decided I'd buy a couple more rentals, and did some single family rentals and found out that those cash flowed. And so I thought, if one cash flows, one unit, I probably ought to get multiple units. So I went and I was going to buy a 4 unit and accidentally bought a 22. And that got me into multifamily. And I just really didn't manage those very well. And but I made money on them because the market just kept going up, up, up. And at that point, I realized I don't want to manage property managers. I don't want to be an asset manager. I want to pay someone else to do that for me. And I realized that I could actually get the same or better returns by paying a professional to be my asset manager. And that really turned me on to passive investing. And that's what I've been doing ever since.
I love that. Let's talk. How did that go from 4 to 22 units? Did the property grow overnight, or what?
Well,
happened?
I had the realtor that I was walking around with, I said, show me some 4 units. And he said, well, how about this one? And it was 22. And I just kind of kept saying, well, I don't think so. And I kept saying no, but he said, look, I didn't know what a curb offer was, but he said, you can put in a curb offer. And if you don't like it, once we tour it, you can say no, even if you just don't like the color of paint, that no reason whatsoever. And so I did that, and then went through the property, and it needed a bunch of work. And so I asked for I didn't know anything about negotiation on multifamily, but I just asked for a bunch of money back at closing, and everything I asked for, they agreed to, which should have been a, cautionary something for me, but I just kept going, and we bought it, and struggled with it for 3 years before I sold it, but made a lot of money, but not in the way I thought. I thought it would cash flow, and it never did, because I was doing it incorrectly. I did it all wrong. And I got lucky and still made money on it in the end.
Right. Good for you. Good for you. One of the things that you said now that you're focused on is completely as a passive investor. At what point in time did you realize, hey, there are some strengths that I have and strengths I don't have? And then how did you navigate kind of working yourself out of not working in your, or I guess I should say, how did you then move to working in your zone of genius?
Yeah, well, the thing was, I was just really struggling with this multifamily, and I bought a 22 and then an 8 and a 4. So I had, I had a bunch of units, and the property manager, when we talked at first, when I bought them, he said, here's, it'll cost $5,000 to rehab these units when somebody moves out. It didn't, it cost like 8. So, I was constantly arguing with him to not evict tenants. He was trying to evict them to do the rehabs because they were bad tenants. But I was trying to fix up the property with cash flow. And that's not the way to do it, right? You need to fix up the property, put new tenants in it. But I couldn't do that because I didn't want to keep paying out of my pocket for this. So I completely had it wrong. I didn't understand what I was doing. And I slowly kind of came around at the same time I was looking at some passive investments and realizing that, hey, I don't want to manage a property manager. At the same time, I had some single family turnkeys in Memphis, and those weren't performing either because I had a bad property manager, and I switched property managers a couple of times. And then I realized, why am I messing with property managers when these syndications are out there. The returns are very similar or better. And all I have to do is I have to do a bunch of work. Passive investing is a bunch of work up front, vetting the deal, vetting the syndicator, all of that stuff. But once I send the wire, it's their job. They're professionals. They're professional asset managers. I was not. I was trying to be a little bit passive with my active investments, and that doesn't work. So I recognized finally that trying to be passive on active investments doesn't work. If you want active returns, you need to be full-time active and in it, inside the properties, doing all that. You can't rely on other people. Once I figured that out, I thought, you know what? I can analyze a sponsor, I can analyze a deal, and I can decide go, no go on specific deals or specific sponsors, and then let them do all the other work. And that's when it kind of hit me. That's what I want to do. And so I transitioned my portfolio, sold almost all of my active stuff, did what my accountant calls a lazy 1031. By investing in syndications, I could use the cost segregation and bonus depreciation to offset all of the gain on those properties, so I didn't pay taxes. And here I am now, a full-time passive investor in real estate syndications.
That's fantastic. When did you start bringing other investors along with you into your opportunities?
Well, so I don't technically bring them along, meaning give them investments to invest in. We kind of educate our community as left field investors, and we educate and network together to help each other become better investors. So we talk a lot about what sponsors we like and what deals we like. And we have done a couple of deals where we've kind of gotten our community into deals, and we may do more of that in 2022. But our primary focus is to help people become better investors on their own. And we also do group investing through a company called TribeVest. But our focus is everybody does their own due diligence with help from the community.
That's really fascinating. So you're not even necessarily profiting by bringing other people into deals. You're just out doing your passive investor thing, and you get to share that knowledge along the way.
Yeah, exactly. And, that might change a little bit in 2022, because like I said, we did offer 2 deals to our community this year, and left field investors, we did that to help our community, and it took a lot of time and effort,
Right.
But we didn't compensate ourselves or ask for any money for it. And, I figured out now that to have a community that's really going to help the people in the community, it has to be a community that makes money for the people running it, because we're spending our time, effort, and resources to do that. And so 2022, that's part of what we need to do. Again, we're not in this to make money. We've been doing this for 2 years and haven't really monetized it at all. But in order to keep it going, we're going to have to. So we're going to make a few little changes, but it's important to us to maintain, our sense of community, the education, and helping people learn how to invest better together or on their own.
Absolutely. Talk to us about maybe, is there a certain demographic that you find is attracted to your group? So they're all at a similar starting point when you begin to educate, or is it just from all walks of life?
It really is everything. We have people that haven't gotten into a deal yet, but would like to. We have people that are accredited. We have people that are non-accredited. We have people that are in over 100 deals. So, we have some real expertise, some really experienced people who are willing to help the new people. And then the new people ask the questions that some of the experienced people haven't asked, forgot to ask, or afraid to ask because they're, experienced. So it really works well. And what I tell people, if you're going to get into passive investing, you need a community. It doesn't have to be left field investors, although I'm biased. I think it's a great group. It doesn't have to be our community, but you need some community, because it's alternative investing is what they call it. I don't think it's alternative. I prefer that to paper assets, because I believe those are speculation. I believe real assets, you're investing in something that gives you cash flow, but not a lot of people are in it. You're not going to turn on ads on television and see people, promoting this. So it's hard to find out about. It's hard to learn about. And it's really scary to wire a $50,000 check to somebody. So having a community that can say, hey, I've done this before. Here's how you do it. I've been with this sponsor. They're okay. That just adds some comfort. And I remember the first time I met someone who invested in not only the same sponsor as me, but the same deal. It was just a sense of relief, because what I thought was, okay, I'm not crazy. This isn't some kind of scam, right? This is a smart person I just met, and they're in the same sponsor, the same deal. It was a sense of relief. And that's what our community provides. education and also some relief, hopefully.
Right, right. What's it been like growing that platform? I mean, so you got this idea, hey, I want to educate people on the passive investing side. I, want to do it for free. How did you grow that?
Well, I tried not to actually. My first thing was I wanted a mastermind for myself so I could learn and help others. And so we started a group of 12 because that was the largest private room we could get in Columbus for free at a restaurant. We were just going to do monthly meetings. And our first one was going to be March 18th, 2020.
Good time.
And pandemic killed that. And we haven't met in person yet. And we've just been doing virtual meetings, and that allowed us to grow, which we tried to stop the growth because we just wanted it to be a small group. But so many people were interested. So many people had so much to contribute. And then being on Zoom, it made it easy to get sponsors, syndicators, experts to come to our meetings. Right. And so we just slowly grew. And once we started growing, we realized we needed branding. We needed a website. We started a podcast, it just kind of took off. And we're still not growing just to get people, right? We want people that are, like-minded, kind of similar to us. We want to maintain our culture. And there's different groups, different communities that have different cultures. And I think it's important for passive investors to find one that fits them. If left field investors doesn't suit you, go somewhere else because there's other groups and each group is a little bit different, or join a few groups. I think I just can't stress enough how much community helps investors become better investors. It's helped me. I'm much better investor than I was a year ago, much better than I was 2 years ago.
Absolutely. Jim, you said that you're a better investor now than you were a year ago. What are some things when you have somebody looking at a new sponsor, maybe that none of you know? What are some things that you say, hey, these are absolute must vet or must ask questions?
Well, the first thing I would say is if none of us absolutely know them, I probably wouldn't be talking to them very much. Or I would, here's the thing, let me back up on that, because I don't want, one of my best sponsors that I like the most is someone who cold called me through Bigger Pockets I think Bigger Pockets. And it took me a while to respond because I was like, this is probably a scam, but I did. And now he's a great sponsor. But since then I've learned, and I talk about community a lot already, and you'll hear me talk about it more, but I'm not investing with new sponsors unless they come to me recommended by somebody I know, like, and trust. Now there's exceptions to that, but because it's so hard to find good sponsors, these are such illiquid investments and they last for so long, right? It's really hard. You got to find someone that you trust that's going to take care of your money. So I am now, this is new within the last year, I am hesitant to work with somebody I don't know. So I prefer somebody that's referred to me by somebody I already know, like, and trust. That said, in your scenario, if it's somebody that none of us know, what I'm going to do is I'm going to take my time. I'm going to have some conversations with them. And I'm going to say, I'd like to be on your deal list. Send me all your deals. I probably won't invest in any of them for at least a year because I want to see them and I want to evaluate them and I want to see how they go. I'll probably ask for reports on those investments that I did not invest in. And then one of the things I do with all sponsors, whether it's somebody I know or not, is I'm going to check their communications, right? When I evaluate a deal, we have at Left Field Investors, we have a deal analyzer, and it's an Excel spreadsheet. And it basically, you put in a bunch of data from the pitch deck, and it spits out the cells turn red or green, whether it fits our parameters or not. And so anything that's red, I'll send an email to the sponsor asking questions and expecting answers. And then this is a test, right? Not only just about the deal, but I want to see, are you going to respond to me within 24 hours? Or do you have a reason why you didn't? The other thing I'm going to look at is the quality of your answers. If you respond, hey, check out the webinar, I'm going to say, I already did. I want to know that you know this deal. I expect answers from you. And then I'm also a little bit high maintenance, especially at the beginning of a relationship. Right. So when they respond to me with answers, I almost always respond right back with more questions. Even if they've answered everything and I don't have any other questions, it's another test. Are you going to get annoyed because I'm asking more questions? What I'm hoping for is what's happened to me several times in the past is someone picks up the phone and says, hey, you really have some questions. Let's dig in. Or they respond with another quality email. If they get upset or whatever, I just move on. There are a ton of sponsors out there. I'm not going to chase them around. I want to make sure that the sponsor I select fits me and is okay with how I operate. And that's the most important thing to me. So I think, I shy away now from somebody I don't know if nobody else in my network knows them. But I also want to make sure that I don't miss people like this one sponsor that cold called me, right? If I had that policy in place before, I would never have known him. So it's a fine line, but I prefer people that are referred to me. But if not, it's going to take me about a year of dating before we get married.
That's great. That's great. Yeah, and it's tough, especially out of the gate, to have that patience and also that diligence, or discipline, even when you're following up, going, okay, I talked to this sponsor on this date. Here's the deals they sent me. I mean, that takes some organization to stay in. I mean, I guess my email box, I feel like deals come every single day. So, just trying to keep track of those opportunities just sounds like a lot of work, but that's really fascinating. For somebody that's just starting out, I guess they can shortcut that though by, again, coming to an organization like yours and saying, hey, who do you guys recommend that are quality sponsors? And then they don't have to kind of go through that initial dating phase. Does that sound about right?
Yeah. And really, the way I started out finding sponsors was listening to podcasts, reading books, or just talking or doing research, right? Looking for them, Googling them. And you can find some sponsors that way. You can find some sponsors who are really good at marketing, but I don't know if they're good operators.
Correct.
And that's why for me, being in part of a community, I don't need to go look for those sponsors because our community shares who the best sponsors are. And we might miss out on some good ones, but we're also missing out on a bunch that probably aren't as good. And so I don't need to chase them anymore. I used to chase sponsors and then I'd feel obligated, right? I'd talk to them and they'd tell me all they do. And then I'd feel bad if I didn't invest in their next deal. That's another thing I would say is don't ever feel like you have to, invest in a deal because you've talked to them. I tell the sponsors up front, hey, I'm probably not investing for a year and I'm going to check out your deals. And if they have a problem with that, I'm moving on. There are so many sponsors out there. There are quality sponsors out there that I don't need to deal with someone, as I said, who doesn't fit with what I'm looking for.
Right. That's fantastic. I love that. It just the honesty with the sponsor up front. Hey, look, I'm just going to kind of trail you for a year, and then just the other notion that there's different sponsor types for different investor types. I think that's a really key point that people would do well to hear on this podcast. Jim, let's jump here into the final four. First question is this: what is one tool or resource you find you can't live without?
This is going to sound repetitive, but I mean it. It's community, and without a community to help me, I know I was investing in things that haven't turned out how they should have or how I hoped they had. And once I got a community and started talking to people and getting help with people and helping others, I became a much better investor. And without the community, I don't know if I'd still be investing passively.
Right. That's fantastic. If you could help our listeners avoid one mistake in real estate, what would it be, and how would you avoid it?
I would invest with people you know, like, and trust, or as we said before, who are referred to you by people you know, like, and trust. That's a starting point. That doesn't mean you only invest with those, as we already talked about. But I can't emphasize enough, you're getting into a long-term deal, 3, 5, 10 years. You're putting a lot of money, $25, $50, $100,000 in a deal. You got to make sure that these are people that are going to be around, that you actually like dealing with, and that you trust them. And if you don't have that, you're going to have bad experiences. The times I've had bad experiences were when I didn't vet the sponsor properly, or another one, when a sponsor that I liked and did a good job at one asset class, went into another asset class and they didn't have any expertise there. And that's another place where I lost money because I went along with them. I don't do that anymore. You either have to hire someone, that sponsor has to hire someone who knows how to do that new thing, or I'm just going to sit and watch and see you for a couple of years before I invest in your new shiny object.
Yeah, that's a really, really good point. I don't think in 400 episodes I haven't heard that point there about when you see a sponsor shifting. If they're the active operator and you see them now going into new asset class, that's an excellent point to just sit back and kind of watch how that shakes out, because you don't want to pay for someone else's education.
Absolutely.
That's fantastic. Question number 3 for you, Jim. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
I know I am completely repetitive, but it's building a community. The thing is that there's millions and millions of dollars being spent by all the financial institutions advertising, invest in this stock, have a bank account here, all this standard Wall Street stuff. And then when I was a financial advisor, they would tease me because I'm doing this alternative stuff. alternative, it's investing in the places people live, the places they go to work, the places they go to buy stuff, the places they go to store stuff. How is that alternative? So what I'm doing is I'm building a community to help educate others so they can learn, hey, there's something else. You don't have to just do what everybody else is doing. You don't have to put all your money in a 401k. You don't have to put all your money in Wall Street. There's other opportunities, and you don't have to be wealthy. You don't have to have knowledge. You just have to be willing to learn and willing to expose yourself to something new.
That's fantastic. Jim, if a listener want to get in touch with you or learn more about you, what is the best way to do that?
The best way to do that is go to our website, www.leftfieldinvestors.com. You can subscribe to our newsletter. There's also a masterclass on passive investing on there that's free. And you can, it takes you all the way from what is passive investing, what is a syndication, all the way through how do you analyze a deal, how do you screen a sponsor and all that. And if you'd like to chat with me, you can, on there's a connect with Jim button. You click that and you schedule an appointment. Or if you just like to email me, you can email me at jim@leftfieldinvestors.com. Part of what I do is talk to new investors, experienced investors, whoever wants to chat about passive investing. You kind of wind me up and I go. So I love talking about it anytime.
Jim, thank you so much for your time today. I do appreciate it.
Thank you. It's been a pleasure.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen. If you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.